Welcome to ETF Leaders, powered by the New York Stock Exchange. Joining me today is Graham Day. Graham is Vice President, Product and Research at Innovator. Graham, thanks for joining me. Great
Judy,
to see you.
Yeah, thanks for having me.
Of course. Okay, so Graham, tell me, what are the biggest challenges in 2022, and how can investors manage their risk?
I think the biggest issue that we're seeing today is inflation. Inflation and rising rates. And I think there's a lot of risks out there from a geopolitical perspective, but those tend to wane over shorter periods of time. I think the concern needs to be around inflation because inflation can persist for years on end, and that's really bad for investors from a fixed income perspective and really from a risk management perspective. And I think because inflation's so high right now, what we've seen historically is the Fed has been unable to create a soft landing for the economy when they've started to hike rates at this level of inflation. So that's bad for equities as well. So if you got inflation that's eroding the bonds, if you've got recession risk that could potentially be bad for equities, people are looking for new ways to manage their risk. And so that's where our suite of buffer ETFs, I think, have really gained a lot of attention from advisors because these ETFs give you exposure to the equity markets, but they have known buffers of, say, 15% against market losses. So it gives investors the peace of mind to be able to say, look, we're going to stay invested, we're not going to take interest rate risk, but we're also not going to be fully exposed to market downside. And so that's a new tool that we're seeing advisors implementing for their clients.
Okay, so tell me, what are you hearing from institutions, advisors, and retail right now?
I think the biggest thing that we're hearing is, what alternatives to fixed income do I have? We've seen that the Fed has just started to hike rates. Bonds had a bad 2021. They're off to a bad 2022. And at Innovator, we don't believe that all of that risk has been priced into the fixed income market. We think there's still more pain ahead because the Fed is going to have to be very tough on inflation. They're going to have to raise rates more than I think what a lot of people are expecting. And so because of that, the most wealthy clients are coming to their advisors and saying, why would I be in fixed income right now? It's not defensive anymore. The yields are still relatively low. I need another solution. And again, that's where we're seeing the buffer ETFs. They're more of that hybrid solution being utilized as a way for investors to maintain a defensive posture, but avoid the interest rate risk of bonds.
All right, and what are your market expectations for 2022?
I think it's going to be a slow grind. I think we're going to have a lot of volatility. I think there's going to be bigger moves up and bigger moves down. I think this era of the equity markets returning 15-20% a year are over. I think we're in a period for lower growth, more volatility, and so because of that, I think people are going to want new tools to smooth that right out for their clients.
Okay. All right, Graham, great to talk with you. And that's ETF Leaders, powered by the New York Stock Exchange.